Morning, Manav. How are you? How does your Sunday look like after this?
I have few calls. Every day is pretty much similar.
Yeah. Is it a work?
Uh,
Is it like a working weekend always?
yeah, I mean, when you are, running a syndicate like I'm doing, there is no weekday or weekends. It's pretty much, whenever you have time, whenever anybody else has time,
Correct.
you have these calls. It's a lot about meeting people and, understanding each other and then, taking it forward. So, uh, but it's good fun. So it doesn't really feel like you're working in that sense.
Yeah. Yeah. Great. I think we've sent a reminder as well, so we can start and people can keep joining in. So
Sure.
maybe for the audience, I can give a quick introduction about myself. Uh, am I audible?
Yes, very much.
Great. Hi everyone. Thank you for joining this masterclass on angel investing with Pawan sir. My name is Karan. In my day job, I lead marketing for Meta in India, essentially helping grow Instagram and Facebook as platforms in India. And as a passion project, I run Accelerate. Uh, uh, at Accelerate, we essentially have two verticals. So we run an early stage accelerator where we help young founders build large companies and get mentorship from some of India's best unicorn founders. And we also have this angel investing community where essentially we help people invest in some of India's most exciting companies. In my personal journey, I've been a founder, like I've done two startups before Meta, and I've also been an active angel investor. I've done about 60 plus investments. I had 11 companies on Shark Tank last year. I essentially invest in companies in consumer brands. So essentially, I invest in consumer brands, consumer internet, and B2B marketplaces and SaaS. Those are the four domains I look at, and essentially try to come in super early, so like a pre-seed, seed round investment. So, yeah, that said, super excited to welcome Pawan sir, for this session. Pawan sir has been a serial founder and investor. He has built companies like Active Karma and Whole Foods, and invested in 40 plus companies as an angel through his syndicate and otherwise. Some of his notable investments are in companies like Leverage EDU, Agnicool, Lisoon, Fitbart, Digital Pani, Navdham, Burgerama, Centrity, Good Meetings, and so many more. He's also had multiple exits, in his journey. He's also a partner at Venture Garage, and he's building his own community of angels as part of the Venture Garage syndicate. So, sir, welcome, to this session. I ask this question to everyone, who leads our sessions, and the same question to you as well. Would love for you to take us through your journey and like what really inspired you to start angel investing.
Uh, well, what really inspired me was the timing. I mean, that's how it started. I was sort of making an exit from my family office and I wanted to look at new opportunities. I had been so engrossed for 18 years in running that business that I did not know what's going on. So the purpose was really to figure out a new thing to do. And in order to learn, I thought better is to put some skin in the game and started investing. Of course, at that time, I was helped a lot with by some of the friends who were already doing active angel investing, and I just sort of followed their lead. But the luck immediately turned very good, and we had fabulous exit, and that's what sort of kept motivating me, and I kept going after that. Yeah, so it's been over 10 years now since I've been investing in startups.
Got it. And when did you start? When did you write your first check?
2013.
Got
Yeah,
it.
it was in a company called Quickwell. Quickwell was acquired by Fractal, and that was the first big exit which happened. Um, yeah, so that's how the journey started.
Got it. Got it. And like, what was the motivation for you to start? Like, obviously you mentioned that you were exiting your family office and family business, but like, was angel investing an exciting asset class? Like, was that the only motivation was also because it's intellectual simulation, learning from top founders, understanding what's really happening in the ecosystem.
Yeah, when I started investing in other startups, I was not really looking at startups as a separate asset class for investing. Those investments were already happening in the in the stock market, and otherwise. This was more about learning. And as I kept going into it, what I realized was that I actually enjoyed this journey where there is a lot of learning happening. I also realized that there is a lot more happening in the world which I did not know about. And if I, do not invest, I will probably miss the waves which are going to happen, which actually came and still are coming. Uh, so my motivation really is number one to be part of the everything new that's happening, whatever I can be. One, and secondly, also to surround myself with some really smart young founders, so I stay young as well.
Amazing, amazing. And what's been like your investment style? Like you've done about 40 plus investments, right? So like you like and it's been since 2013 that you've been investing. So like do you invest every year in three, four companies? Or I mean like is it like sometimes you'll invest more, sometimes you'll hold back? And I'm asking this question because there are a lot of young investors on this call as well, right? So and people will watch this video later on. So, how does one build an investment strategy? Like, how much should one invest uh, from a quantum? Like, how much should I invest in a particular startup? How many companies should I do? Should I do more in certain years? Should I do less in certain years? Like, what would be your recommendation there?
Uh, so what I will share with you is what I talk to others, and then I also tell you what I have done. So I think for an angel investor, what is important is to understand that when you invest in a startup, an exit happening before 4 years is an anomaly. Um, Now, in order to get to that exit, what you need to do is to diversify your portfolio. So I always ask people to invest in 7 to 8 companies in 2 to 3 years when they're starting off. This gives them enough diversified portfolio, as well as it allows them to, uh, you know, be part of different kind of waves or different kind of trends that are going on every year. Things change, so they'll be part of different trends. And what will happen is that, let's say, whatever number you have put in those 3 years, let's say it's 50 lakhs. At the fourth year onwards, you will start seeing opportunities of exit, even at least in one of them. And that's when you start rolling your money. Uh, Expecting one investment to go on and give you good returns is really riding a lot on the luck. And that's what I think everyone should do, in my opinion. What I do, I mean, I've been investing for 10 years. I have invested in 40 plus companies. Uh, but obviously, it has not been like every year I invest in equal number of companies. In the beginning, I was a bit slow because I did not understand anything. those were the times when there were no master classes happening for angel investors. So thanks for doing this, Karan. So I basically we had to learn from our peers, learn what was going on. It was a slower process, and also the number of startups were much fewer than what we have today. So I learned slowly, and in the first few years, I was investing in maybe two companies in a year. However, that started to change, around 2017, 18, when I started getting into 5 to 7 a year. And then I've kept that pace since then, except for 2021. 2021 was the time when COVID was in full swing, and there were lots of new ideas and new thoughts, and the world order will change kind of opinions which were coming out, and there were a lot of investments happening in all kinds of businesses. I was very scared of investing in anything because I could not pinpoint on any trend. I thought that if everybody gets invested, then obviously it's something is wrong there. Yeah, right. So I did not invest. I invested only in one company in 21, but after that I picked up pace again. And 22 and 23 I've done more than 15. So yeah, that's the only reason. Otherwise, I think in the future also I'll continue with the pace of doing 7 to 8 or something like that every year.
Got it. I think it's so contrarian. A lot of people started investing in 2020, 2021, and I mean, they were very aggressive at that time. And there were a lot of waves coming in that time as well, different ideas. I remember this whole piece on Web3 and crypto, which was really hot at that time. And a lot of people put in a lot of money at that time. I think you had the opposite strategy where essentially where you believe that if you were not really excited about the sector, you kind of chose not to back it and you took it slow. So that's interesting. And sir, if I may ask, what's like how much is your ticket size in a personal capacity, and essentially like how much should an individual angel investor also look at investing in a particular company?
Uh, so I think first of all, what amount somebody puts in is a function of what kind of capital they are ready to lose. It's a
Okay.
Angel investment is a very risky investment, and it's one of the most risky asset classes, in fact.
Yeah.
So if you're investing in a startup, I typically do not look at those as investments. I look at that as money gone, and hopefully it will come back. That keeps me peaceful. So the capital that you allocate to this should be the capital that it should be a fraction of capital which you will invest in stock markets and real estates, right? So whatever is your other asset classes, anything more than 25%, I think is a bit risky, in my opinion. But people can have different thoughts. I'd keep it like that between 25 and 35%. So the amount that I put in every startup is also dependent on that, big number. My typical average is about 10 lakhs in every startup. And I think that gives me opportunity to diversify my portfolio. If I have the capacity to invest more, there are some startups which I really like, so I go up to 15 or even 20. But then there are startups where I feel that it's actually a much higher risk, then I also go for a lower number. So it's a function of both risk as well as capital that you can allocate for this.
Got it. Got it. I think we have very different strategies. So essentially, like in my personal capacity, so one philosophy is very similar. I also look at 10 to 15% of my overall assets being allocated to investing. And then my strategy has been that I've invested in about 60 companies in the last 3 years. So I got 20 to 25 years. And check sizes are smaller. So, I can do like a 2 to 3 lakh rupee check size and essentially then look at, like try to come in pretty early. So again, I think that, depends upon an individual's investment thesis. And, I think, like what has been your investment thesis, right? Because you've invested in like super companies like Agni Cool, and we've all heard about those companies, and then you've also done a lot of interesting consumer internet companies like Leverage EDU. You've done, even food companies like Burgerama. So like, are you sector agnostic, or you look at certain sectors and then within those sectors, like, what is the timing that you try to come in?
Yeah, so I am very much sector agnostic, and I actually recommend that people should be sector agnostic. Maybe you can choose a couple of sectors that you like and you could invest in them. But my personal thesis is that there are some good stuff happening in, let's say, five or six categories. Why not allocate? Why not try and pick winners out of each one of them and invest in them? There is also a strategy which people use, and it is also very successful, which is that I understand consumer like you do, and hence I know what are the trends, and hence I know what's going to grow. And you say, okay, instead of picking five winner, which I will never know, or one winner, which I will never know, let me just pick five of those. So I think both of those things work. It really is a very individual thing, because angel investing is one mathematical, but is also an emotional, content, emotional reason for investing. So I have been sector agnostic, and the reason for that also is because I like to learn more about more sectors. I would like to be part of, what's happening in defense and space tech, and I would like to be part of building consumer brands. By the way, I understand consumer businesses, food businesses very well, and that has prompted me to invest in those. And some of these companies also offer me, strategic role in the company, so that also helps. But then there are spaces like robotics, which I do not understand as a product perspective, but I understand from the business perspective, and I know that there is space which is going to happen. So why not explore that and see if there is something good happening there? Be part of that. Yeah. So that's how I look at it.
Got it. Guys, please feel free to ask any questions you may have. You can raise your hand. You can type, in the comment box. I think one question that I, uh, uh, had around your investment in Ugly Cool, right? So, like, how do you kind of get such opportunities, right? Like, I mean, like, it's been like one of the best tech companies, made India proud, right? So, like, how do you identify such opportunities early, and then how do you reach out to the founders? How do you works like
So I'm a firm believer in, um, in being part of a group which has the ability to source some of these businesses. I wasn't running a syndicate 1 year back, right? So before that, I was part of three syndicates. Um, you know, there is a syndicate run by Arun Tatanki. There is a which is called Waveform VC. There is a syndicate slash a fund now, which is Anicut Capital. There is also Climate Angels. I'm part of that as well. So when I was running my own business, I did not have time to go around, sourcing deals. I knew that if people came to me, I could judge them, or I could guide them to some experts to get their opinion and see if I would like to invest. But I did not have time or any kind of bandwidth to source the deals myself. So chances are, and chances were, that I missed a lot of good ones. Uh, but in order to get those opportunities, I became part of these syndicates. So Agnikul, for that matter, came through Anicut Capital, and others like Leverage Edu actually came through my own network. But then many others have come through these syndicates only. So that's what I recommend to all angels who are starting off, and maybe even after that, when they are a little bit expert, to be part of few syndicates, because the syndicate leads, like I am doing now, my full-time job is to source the best companies around, right? So we know these numbers. There are some 20,000 companies getting registered in Startup India, and 13,000 of those are going out to raise money. 1,300 of those actually get funded, and we want to pick 10 of those, right? So how do you do that? Is through your network, going around meeting various founders, various investors, super angels, VCs, network and various other for platforms, and hence get some of these potential gems out, evaluate them, and then put in front of the angel investors. Angel investors, an individual, uh, will not be able to do it very easily.
Got it. So I think what you are recommending is that join multiple syndicates, with people who are experts in certain domains and certain sectors, and kind of rely on their full-time expertise to, source the best companies. Uh, uh, and sir, if I may ask, to just understand the technicalities more, like, can you take us through three, four different ways, through which an angel investor can invest? So, like, obviously, you talked about syndicate, but like, if I have to do direct, then how does that look like? And I believe that you're also an LP in some of India's best funds, right? So like, that's also a route. So like, if you can just take us through the entire ecosystem so that people know that what kind of options are available.
Yes, so first of all, very easy is that you can invest directly on a cap table. Typically, you will get an opportunity to invest in a cap table if one of your friends is the startup founder, or your friend's friend is a startup founder. When they're doing a family and friends round, which is fairly early in their journey, that's an opportunity angels get to be part of a startup and go direct onto the cap table. Technically, even that has now changed because some of these AIFs allow even founders to build a syndicate, but one and the same thing. Second thing is that is syndicates, right? Like I said, be part of syndicates, be part of accelerators like yourself. I don't know if you allow some of these angels to take part in your deals.
We do.
Yeah, so you also have something like this. So here you are relying on some other experts, not just your friends, but your some experts who will bring you these opportunities. And we all know it's fairly easy to be part of any of these syndicates. There is hardly any cost to it, and you will keep on getting opportunities, and you can gauge yourself what you want to invest in. There is no compulsion. Third way is you be a part of a blind pool, which is any fund, right? There are so many VCs who are looking at LPs. There are angel funds where, as per SEBI regulations, you have to invest 25 lakhs minimum over a period of 5 years, I think. And then there are VC funds where an LP has to invest a minimum of 1 crore over a period of 5 years. So one can be part of either of them. And there are, I'm sure through the network, people can find out opportunities to invest in such funds. And But that is more of a passive investment because you will never be asked, you will never know the business as well. Uh, Chances are that you'll never even have an access to the founder. But yes, it's a great journey to have because I have invested through Stellaris in some stellar companies like Mamaearth, uh, right? And and there's some other businesses as well like that where I would have never had to, never, never I would have invested in those. So I see these three ways of being part of the startup ecosystem.
Got it. Got it. And I can see a couple of questions, so I think we can take them. Like, I think Manav has a couple of questions. Uh, I think one is Manav. You want to go ahead and ask?
Sure. So, Pawan sir, what are the kind of equity investments that are commonly used in startup investing, like CCPS, preferred shares, etc. And how does one decide, which to go for? Is it whose decision is that? If you could clarify that, please.
Typically the decision is made by the lead investor along with the founder. It's a mutual decision by them. So if some company is raising, let's say, $1 million, they have somebody who's putting half a million. Let's say that's an institutional investor. That institutional investor will negotiate the valuation, the share price, the form of investment with the founder. Uh, More often than not, institutions would go for straight equity, but there are times when they also do a CCPS or even a CCD round. Um, so, as an angel investor, as an individual angel investor, you will not have the choice of saying what you want to actually do. Um, There are cases where a startup is raising, let's say, a 1 crore kind of a round, and you are part of that friends and family group that they're raising money from. Then collectively you could negotiate with the founder, whatever you like to do. Um, those businesses are so early in their lifetime that it's very difficult to put a valuation. And also, doing equity rounds are a little bit complicated from the compliance perspective. So, a lot of founders and investors agree on a convertible round, which can be done very quickly. And then on the next round, you can go for whatever terms are there, discounts and whatever. In between convertibles, CCD and CCPS, CCPS is better. I think you have more rights in that case. Technically, I think there is enough information available on the net, and one can do that. Does that answer your question, Manav?
Yes, thank you. Thank you very much.
Okay.
And are there any multiples, like on like how does one decide a valuation of a particular startup? Like in certain domains, like you invested in space tech, in food, and consumer internet. Like, what's like if I'm evaluating it as an angel, right? Like if I have to decide whether I want to invest in this company or not, how do I know whether it's overpriced or whether it's the right valuation?
Very tough question. There is no straight answer for this. Valuation is not a science. We all know that. Uh, uh, there are valuation which are done on revenue multiple. There are valuation done on yeah, potential as well. So it also depends on the stage of the company, the category of the company. To give you examples, let's say we'll pick up any consumer brand, right? Whether food or non-food. Um, at a stage uh, when they are just starting off, or have maybe 4 or 5 lakhs of sales, and they're doing a friends and family round, and it's a priced round. At that time, doing a revenue multiple will not fetch any kind of valuation. So you have maybe a 50 lakh annual run rate. If you do a 10x of that, even it will give you 5 crores. So you cannot just do a 1.5 2 crore round and give away so much of your business that early. So it also, so at that stage you could do a convertible, but the valuation could be a 20x as well at that time. But as you grow bigger in a consumer brand, especially, the multiple keeps on reducing. At a level when you are doing a round of, let's say, 2 million, which is your pre-series A, maybe the multiple could be 4 or 5x depending upon your revenue and also potential. Again, as I said, there is no science to it. How do you know it's overpriced or not? Is one way is also to find out what else in the similar category got valued at maybe a similar stage 1 year back. Let's say there was a consumer brand in food, and it was selling pizzas, and they had a run rate of, let's say, 3 or 4 crores per month. So let's say 36 crores per annum, and their valuation was 100 crores, which is just about 3x kind of a thing. And if you are and that company has grown now, is at a bigger number, but now you're investing in a burger brand, uh, which is at the similar level, having seen all other conditions seem to be pretty much okay, then you can actually do some kind of a comparison there. So those kind of things are also done in the market. But when you go into tech, right, when you get into, let's say, a B2B SaaS kind of a business, or something which is into research, building something like a molecule, or which is into AI, something which could actually be hugely profitable in a few years' time, the valuation multiples over there are much, much higher, and rightly so, in my opinion. So it depends on the stage as well as the category you are in. But once again, there is no science.
Got it. Got it. Uh, I think you mentioned you mentioned a few sectors. So, would love to, since we have you on the call right now, would love to understand from your vantage point, like what are few sectors that you guys are, like you are personally super excited by, as an investor in India over the next few years.
This is my favorite topic. I can go on and on about this because I only see opportunities, and there are so many right now. Um, Let me just start off with I mean, I'll just talk about few of them. So just give me some time on that. First one is uh, the consumer brands, right? In India, India is I mean, it has first millennials and then Gen Zs and whatever, and all these kids who are in the age group of 18 to 30, let's say now, or even older, a bit older now. All of them, not all of them, but a huge population of them is decently rich. They have more disposable income than similar people had, 15 years back. So this generation is looking for new brands and even new products which talk to them, which take care of their needs. Uh, Something which was not which was being used by their parents is not what they want to use anymore. So hence the advent of sugar, hence the advent of Mama Earth kind of brands, and there are more which are coming. I think in this whole space of consumer brands, there is a lot more that's going to happen. Uh, uh, I think there is still space for something good to happen in men's grooming. Something good should happen now in sexual health and sexual wellness, mental health also, sports, right? So and community travel, things like those, because people are looking for different kind of entertainment. People are looking for different kind of products which are for their specific needs. Second big sector is in India, actually, a lot of money is spent by the government uh, to spruce up the industry. So government area, which I like really a lot, is defense and space. There is so much more that has to still happen. One of the big areas now is quantum communications, right? AI based surveillances. There is a lot more that's going to happen there. Then, of course, there are evergreen sectors like fintech. Lending is always going to be a big business in India. Uh, B2B SaaS as well. A lot of what has happened in the past few years, which was not AI enabled, has to be recoded and made it AI enabled, right? So much more that's going to happen there. AI and supply chain, that's another big tech, because a lot of stuff is still broken in India. We haven't reached, so many cities and towns we have in the country, northeast for that matter, right? It's a big booming place, so supply chain has to reach there. uh, I also think that manufacturing uh, is always going to be something which India is going to gun for. Some solutions around that, especially something like robotics, which makes India a high precision manufacturer. So robotics is another space. Um, yeah, and then my one of my favorite spaces this time. It's more of a passion right now. It's around sustainability. A lot of people are still not talking about it as investors. There is some noise which is happening, but I think if we don't build a sustainable future for us, all of these things are not going to matter, right? So air, water, food, everything around it, we need to we need to work on. And there is a lot of solutions happening, but I think investments will also come in that side. Yeah, so that's something which I'm very excited about as well.
Amazing, amazing. I think I was just noting down everything frantically and put it on the chat as well. I think very well put and all. I think all sectors are super exciting. I think just on generative AI, you spoke a lot, right? AI based surveillances, like which are either focused on government spending, AI in supply chain, AI enablement in existing industries like fintech, precision AI in precision manufacturing, right? So like how is this, I mean, like because personally I've only done a couple of AI investments till now, right? Maybe you would have evaluated more, right? So like are we now getting to a stage in India where essentially we are seeing very good AI based businesses being built in these kind of spaces? And what is the life cycle of these businesses like? Do we feel that for the next 4 5 years they're going to be like in product development stage, and then would it kind of go to revenue and commercialization, or would we start seeing a lot of these things being commercialized today itself?
Um, so there are Two parts to this. There is one which you talked about, generative AI. So, Gen AI, I think a lot of work has been done. And what we are going to develop now are going to be largely tools. I think US and Chinese companies have been far ahead of India in the Gen AI space. And India doesn't have to keep catching up on that. There are many other things which have to be done. So India will be good at building a lot of tools around that, and then be plugins to various other, Gen AI softwares, etc. At the same time, AI is also something which is going to solve many other problems of India. Right? India has a huge health problem. India has, I mean, all other countries also have, but India has a huge population, so hence health becomes a very big thing. And also various kinds of efficiencies, because there is so much broken, whether it is supply chain, whether it is manufacturing, logistics, and even in the way the government works. So there is whatever has happened in digitization has to be now AI enabled. Think about it. That much more work which is going to happen there. So all those things are fairly commercializable, and it's already happening. I'm already invested in a couple of businesses which, you know are, let's say, one of them is a supply chain business, but they use AI to make supply chain more efficient. They use AI so that the work of people who are, just sitting there and reading, let's say, an invoice and typing it and then making their own invoice on top of that, uh, they are using various tools and a lot of AI to make it faster and more efficient. I think all of that is going to happen. So that is all commercial. It's already getting sold, in the space of SaaS. Yeah.
Got
So
it.
AI is something which I also am learning. Right, all of us are learning. It is something which I typically allow other experts. There is a Sense AI, and there are Stellaris has also invested in AI, and they have enough experts who can guide on this space. Yeah, so I use their knowledge to make my decisions in investing in AI.
Got it. I think very well said. I think one of my favorite personal investments, in the Gen AI space is this company, which is doing CBC testing with just a drop of blood, right? And they've achieved 99.5% clinical accuracy. They're still under trials and all. So essentially, they've developed an AI-powered microscope, which normally what happens is like in oncology, you require a lot of blood for blood testing, which is unsustainable. Like for kids and all, like you can't draw a lot of blood, right? So and generally the current microscopes that we have, they're not able to identify like whether it's a platelet or it's RBC or it's a lymphocyte, right? So they've developed an AI powered microscope which with a very little prick of blood you can kind of identify all of these elements in a CBC and then give it with a clinical accuracy, right? So I think again, where you said that like enablement of existing solutions and making them 10x more efficient is something where AI can play a huge role in, and it's already being commercialized. So
No, I think you talked about something really interesting, and this is another category where, as I said, health tech is something which is going to be very big. So AI will be used in that. There is also a lot of work going on in, create on doing all these health analysis and generating reports of people's health without doing any invasion.
yeah,
So there is something which is happening from face. There is also work which is going on around using the old traditional way of a doctor putting three fingers on your veins and to figure out what's wrong with you. So there is a technology which is being built around that. There is a very nice company based out of Pune which is doing this. So there is that much more which will be used in tech, in AI, etc., for health as well.
yeah, for sure, for sure. Great. I think one question on a qualitative front, right? Like over your like in 40 plus investments, what have been some of the most like the best traits of successful founders that you have seen, right? Like when you're evaluating a founder, how do you judge them? Like the founders who have done really well, provided great exits, built large companies. Like what have been some traits that you have observed, from a close up?
Uh, Absolutely, Karan. 75 to 80% of my decisions of investing are based on the founding team quality. Um, it's very important, because whatever they pitch you, whatever they're pitching with, when you are listening to their pitch, might just change after 6 months completely. The ability of the founders to stick to a plan or change quickly, both are very important. So what I see really is a lot of passion, ability to sell, uh, and I see how much they are going to stick together to build this. These are not easy things to judge, but I think over hundreds of meetings every few months, you tend to get fair bit of an idea uh, after a couple of meetings where it's going. uh, what really helps also is references, where the founders are, how what you introduce to them, how much do you know them personally, or somebody else knows them personally. Also helps is their background, in the sense, uh, have they set up a company before, or have they worked at a as like a founding employee of one of the big companies, big startups, and they've seen the journey. I think those kind of things help a lot. Yeah, so there are uh, one in my mind. I do have some kind of a checklist, but it's not like a tick mark paper thing which I do. But that's a very important part of making an investment.
But so it's a lot around the founder bet, their traits, passion, ability to sell, their background checks, their experience, whether they've built something or been a part of something which has grown really large.
Absolutely, those are very important, very very important parts. Uh, Especially if you can find a founder who actually built something but did not get that success and is now rebuilding something. The fire is at a very different level. And if you can see that passion this time round, because they would have learned a lot from the last mistakes, I think you just might find a winner. By the way, I mean, you would know that almost all unicorns were not first businesses of those founders,
Oh,
right?
interesting.
Yeah, so they have tried many things before. You should hear the story of Vinita of Sugar, Gazal of Mama Earth, and many others, right? So they have all set up different businesses, and then hit upon the right idea a little later.
Great, great. Uh, I think we're towards the end of the session, sir. So maybe like I would love for you to talk about a little bit about Venture Garage as well and what you're building. You've talked so much about people being part of different syndicates to just explore different types of deals. So would do share a little bit about what you guys are building at Venture Garage as well.
Yeah. So Venture Garage is now about 8 years old firm, uh, started by Vineet and Vivek. Uh, they have been running it from the perspective that they want to build a journey with every startup they invest in. They start off with investing through their angel network, then they use their banking skills to get investment from VCs, private equity, family offices, and nowadays uh, taking them to even IPOs. So that's what Venture Garage does. Is becomes a strategic partner to every startup, handholds them from the funding perspective, and takes them to the potential exit levels wherever they can. Uh, I joined them early this year, and my role is really to build a syndicate. I had already built one syndicate and I just moved that to Venture Garage. What was called Horizon X got renamed to VG Angels, and we have added many more investors now. Uh, so the idea over here is syndicate, of course, is almost like a fund, right? So I function like a fund manager, lead investor. My role is to evaluate companies, evaluate founders, their diligence of their due diligence of their businesses, and everything else. Build my thesis, decide to invest, and then say, okay, I'm investing. Would others like to invest with me?
Yeah,
So it's that kind of a journey. Uh, and we will also be maybe looking at setting up our funds at a later date.
amazing.
I think in case of Accelerate, your journey starts a little earlier than what we do. What I know is that you come in fairly early in the sense that when you can tell a little bit more about it, because what I understand is that Accelerate is actually accelerating very early stage companies, giving them access to some fabulous mentors. I know you are there. I know Apurva is there, and a few others. Yeah. So you give them access to really good mentors, their networks, and help them kickstart their businesses very well. So
Correct.
we come in at the stage post that, actually.
Correct. Correct. So I think Accelerate and Venture Garage are great partners, in
Yes,
that
of
respect.
course.
For me, because I've been a two-time founder myself, I love working with founders at a very, very early stage. So, when I typically invest, it's almost at an idea stage. That's when my check comes in. And essentially, I've invested in companies, where the founder didn't even have a name of the company ready. And, they just thought कि हमें इस category में कुछ बनाना है, and वहाँ से, we started working on the product. And over a period of 1 to 2 years, we help them scale to a certain extent, and then essentially we also open it to the Accelerate community and super angels, where they can also come in and invest, and then help them with their future rounds through partners like Venture Garage and like larger funds. So that's been our journey. But thank you so much, sir, for your time. If there are any questions from the group, we can take them now. Perfect. Thank you so much, sir. I'll share the recording of this session, with our community. You can also share it across. And again, thank you for your time on a Sunday. Thank you so much, everyone, for joining in. Like, look forward to collaborating and learning from all of you.
Thanks very much, Karan. Thanks everyone for joining in, and really nice to do this. Thank you very much again.
Thank you, sir.
Bye bye.